Good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Hump Day. It's February 17th. Hey, we got a bit of economic news releases to go over today, so we're going to jump right into it. We got the Producer Price Index. This is the wholesale inflationary numbers that we look at. It's not most important, but it does give us a gauge as to what kind of help guide us as to which direction if inflation might go up. It's not that real important primarily because even though sometimes the cost of goods to the wholesale side of things, they don't always pass on to consumers, and that's what we really look at. So that's why we put a little more emphasis on the CPI and the PCE indexes. But anyways, let's jump into it. We had a contraction back in the month of December at negative 0.2%, and January was forecasted to have another negative 0.2%, and actually it went upwards at 0.1%. But when you strip out food and energy, which creates the volatility, we have what they call the core PPI. And back in December, we had a 0.2% increase, and the forecast was supposed to be at 0, and it actually went up 0.4%. So, pretty good spike in inflationary costs on the wholesale level here. So we'll have to kind of wait and see if that translates into the inflationary side, because there's a lot of concern with inflation that we could have actually deflation versus inflation, which is even worse than high inflation. So we need to really so hopefully that's good news, so we can see a lot more inflation coming upwards. The Fed like to see on the consumer level at the 2% range. Right now we're at about 1.3, 1.4 range on the PCE, and that's the Fed's favorite gauge. On the other hand, we got the housing, some data here for housing. We had back in December 1.143 million for the housing starts. And it was supposed to go up to 1.165 million, but actually went the opposite direction, 1.099 million. So it dropped about 3.8% from December to January. Building permits also a slight dip, kind of within range, but a slight dip, but it's still above the 1.2 million, which is good news. So we went from 1.204 to 1.202 million. We also got industrial production. This is kind of in the more manufacturing data here. So we had a contraction back in December at negative 0.4%, and our forecast is supposed to go up 0.3%, and it went all the way up to 0.9%. So a pretty good spike there, which is good news. As well as capacity utilization going up, which is also good news. We had a going from 76.4% in December. Forecast is supposed to be a slight increase to 76.7%, and it actually exceeded that at 77.1%. So overall, decent numbers, except for housing was a little bit short. But you know, when you're looking at January numbers, typically we do have a slowdown because obviously winter time, so we don't typically would have a lot of construction anyways. Last couple of years we've had some pretty extreme weather on the East Coast that prevented construction and even are affecting our GDP. But this year it's been a little bit more mild in comparison the last 2 years. So these numbers overall aren't that bad. Later today, by 11 o'clock Pacific Standard Time, the Fed will be releasing their FOMC minutes from the last meeting. And they're going to be looking for any clue as to the Fed stance, if it's a dovish tone or hawkish tone. There's been concern, of course, the pace, or if they will even raise rates this year, especially when there's been mention even from Miss Janet Yellen herself, stating that there's concerns that the global could at some point affect the domestic economy here at the U.S. We are still showing some improvements, but we've had some since the last rate hike in December. Some numbers kind of dipped, especially on the manufacturing side of things, where things have slowed down considerably. Right now, the stock market's up. A lot of it's anticipation for the stock market. They're hoping for dovish tones in there. Oil prices went up. We're at about $30 a gallon now, or a barrel. Excuse me, $30 a barrel. Wow, we wouldn't be driving around if it was $30 a gallon, right? So anyways, those are kind of things. Now, this could, after the Fed release their minutes, if it comes in pretty hawkish, this could quickly turn around, and we'll have to kind of wait and see. But as of right now, this morning, their anticipation of hopefully a dovish tone is what they're looking forward to. As a result, we're down about 19 basis points from where we left off yesterday, which translated to interest rates rising a little bit. So it worsened a little bit today compared to where we were yesterday. So as you can see, we have had a pretty big drop. We were up to about the 105.34 range, and then since have kind of come down downwards over the past almost a week now. All right, folks. Hey, you guys have a wonderful day. Thanks so much for watching. And again, rates have worsened a little bit today compared to yesterday, and a lot of things could change after 11 o'clock Pacific Standard Time once the Fed minutes release their minutes. And if it comes in dovish, it would probably be more. It would probably benefit the stock market and maybe even worsen the bond market, which could worsen the rates a little bit further. If it comes in hawkish, it might have the adverse effect. All right, folks, have a great day, and we'll see you guys tomorrow. Thanks again for watching. Bye-bye.